Start off with your view of the NSE right now at a time where things are pretty tentative around the banking sector.
Well, as you rightly mentioned, the index closed lower yesterday, dropping by about 95 basis points. Now, if you look at the trades on the exchange yesterday, a lot of the volumes were driven largely by banking sector stocks. Notable is Access Bank that traded over 200 million in about 951 deals. Now, what we observed is that previously a lot of investors had accumulated position in that stock, and subsequently, given the fact that uncertainties in the sector are yet to be cleared, investors are actually selling off. Our interaction with stockbrokers on the floor of the stock exchange indicate this. Also, you notice that the fact that we still have CBN yet to give us the full outcome of the audit of the remaining 14 banks leave investors on the sideline regarding the banking sector. And so that sector, well, given its the fact that it constitutes about 50–60% of the stock exchange capitalization, continues to see stocks dropping. I mean, you have a bank like Sterling Bank trading about 2 naira, PHP trading about 2 naira also. So the fact that these banks are trading at such distressed valuations indicate the fact that investors are really on the sidelines, because uncertainties still remain, and until those are cleared, the banking sector will continue to take the heat. However, we believe investors should continue to look at other sectors on the exchange. For example, cement. We particularly single out CCN, which was acquired by the Boa Group last week. CCN, if you observe, is another company, one of the few companies that actually present good value to investors at present. This is a company that has its return on average equity upwards of about 50%. Its dividend yield, although much in line with the industry average at about 3–4%, however, has a very good price to book. Another very attractive metric about that company remains the fact that about 1.2 billion shares outstanding. It has one of the lowest shares outstanding in that sector, and so that places it on a very good footing when you're doing the comparables with its peers in the industry. And of course, if you look at its half-year figures, it actually posted an increase of 50% in revenues, while pre-tax profits increased by about 91%. We also have the likes of UAC and UAC Properties. So there are still pockets of companies and sectors in the stock exchange that investors could really look at.
Of course, it is these stocks where their performance is based to a large extent on the recovery of the real economy that have been standing in the spotlight of late. And in the consumer goods space specifically, we've had Unilever stealing a lot of attention. Unilever Nigeria released a trading report very recently saying that they see a 75% rise in 2009's pre-tax profit, while turnover is seen rising over 17% as well from a year earlier. What has market reaction been to figures like that?
Well, market reaction has been favorable. I would go back to CCN, and once again, if you look at how the stock has traded this year, it's actually gained about 128% capital gains this year, and over the last 1 month has actually gained about 35%. Going back to Unilever, as you are aware, Unilever went through a rough patch about a couple of years back, where it had to post losses, and its shareholders' funds took a hit. So, which of course they subsequently restructured, and now they're back to profitability, which of course we mentioned a few months back. So the fact that these companies like these on the consumer goods, cement, and the rest of them exist in the stock exchange actually present good value to investors still. However, we must point out here that all these actually highlight the fact that we need to develop a vibrant fixed income market in Nigeria. Apart from the federal government's bonds being traded right now, the corporate bond side of the capital market needs to be kick-started as soon as possible. We've seen already a few banks championing that cause in First Bank, UBA, GT Bank, and so on and so forth. So, because if you look at it globally, really, the size of a corporate bond market is actually about 5 to 10 times the size of the equity market. So you can imagine the opportunities inherent in Nigeria with a market capitalization of about 4 trillion, say 5 trillion when the market rallies. That means we have the potential of having a corporate bond market of about 25 to 50 trillion if we actually get it going. So these actually underscores the fact that we need to get the corporate bond side of our capital market started, and investors need to move from looking to companies' corporate dividends for paying annual returns, and look to the corporate side, the corporate bond side of things, where you can get fixed returns once you've invested in a corporate bond, and so the equities, of course, will play their own part for giving investors good capital gain in the long run, while the corporate bonds will give you fixed returns annually.
Yeah, well, certainly we have seen the corporate bond market get quite a jump start over in Kenya specifically. But back in Nigeria, we know that 7-Up Bottling Company, for example, has been boasting product expansion initiatives. But in turn, that has reflected very heavily on its balance sheet, which is certainly not cheap in the current climate. I mean, short-term financing grew 100%. Do you see a company like 7-Up Bottling Company, with all of these expansion initiatives in the pipeline, actually venturing down this route that you suggest?
Well, expansion in Nigeria by these companies actually highlight the inherent potential in the broad economy. I mean, I go back to that point, a nation of about 150 million people with demographics showing that we have about well in excess of 50% with an median age of about 19 years. So we will continue to see these expansions by industries in Nigeria, which actually underscores the confidence investors have in the Nigerian economy. So regardless of the cost of the expansion, you have to look at the long-term benefits of these expansions.